Good morning, everyone, and welcome. Thank you for joining us today. I'm Davon Barbour, Vice President of Advocacy and Economic Development for the Hollywood Partnership. On behalf of the Board of Directors and our President and CEO, Chris Larson, I would like to welcome you to the Q2 Hollywood Market Report Overview. These presentations coincide with the release of each quarterly report, which assesses commercial real estate and local business conditions within the Hollywood Entertainment District and Greater Hollywood. By way of background, the Hollywood Partnership is a 501c6 established to manage the Hollywood Entertainment District Property-Based Improvement District, or BID as we like to call it. In 2018, the BID was renewed for a period of 10 years, and its geographic area stretches along the world-famous Walk of Fame and spans historic Hollywood Boulevard, from the La Brea Avenue Gateway on the west to the Hollywood 101 Freeway on the east. Our property owners and our stakeholders represent a diverse array of property types, including office, hospitality, industrial, retail, and government uses. In fact, more than 600 property owners fund our operations that include cleaning, safety, hospitality, and more. The production of this report is made possible by several public and private partners who generously contributed valuable content. This content includes data, market intelligence, and photography. Content credits are noted throughout the report, while a complete source listing is provided on page 35 of the report. I want to take the opportunity to introduce you to Andrew Rodriguez, our new Economic Development and Research Specialist, who was responsible for the coordination of today's report. You'll also hear from him momentarily. Welcome aboard, Andrew. Now let's jump into highlights of the Q2 report. The research content is organized around three focal themes: visiting Hollywood, living in Hollywood, and working in Hollywood. At the conclusion of the presentation today, we will have a few minutes for questions. All right, now let's jump into the report. Andrew, take it away.
Good morning, everybody. Thank you for joining us this morning. I'm very excited to be here. First and foremost, we're going to take a look at hotel market conditions. 2020 was certainly a challenging year for the hospitality sector. However, there is reason for optimism. So moving on to the graphics, Hollywood's hospitality market marks strong positive signs of recovery with the arrival of summer. The big takeaways are nearly 50% increase in hotel occupancy in Q2 compared to Q1. Room demand also soared to 279,701. This reflects a 74% increase in Q2 from the prior reporting period. Also, there was a 98% increase in RevPAR from $50.47 in Q1 to $98.41 in Q2. Late last week, the White House announced continued restrictions on inbound international travel due to the fast-spreading Delta variant. So we will continue to monitor these restrictions, which directly impact Hollywood's traditional large share of international visitors. Moving on to hotel construction remains strong. In fact, 14 of the 16 projects under construction in the Hollywood area are located within the Hollywood Entertainment District, or HED. This figure reflects an addition of 80 rooms within the Hollywood Entertainment District, and the existing Hollywood room inventory is 5,422 hotel rooms spread around 64 properties. Moving on, this slide displays the hotel development activity within our area. For more detailed statistics on each development project, please visit the development activity summary located on pages 36 through 39 of the report. The same table will include multifamily and office activity as well. So moving on, as spring passed and summer arrived, many were eager to explore the world once again. Data through the final week in June shows that the vibrancy on the Walk of Fame has returned to levels comparable to the fall of 2019 and about 62.5% compared to the same week in late June of 2019. So there is steady progress. At Hollywood and Highland, pedestrian counters measured 153% higher during the months of April through June of 2021 than within the 3 months prior. The more local serving intersection of Selma and Cahuenga, the pedestrian counts were up by about 101%. The daytime employee-centric Sunset and Vine intersection is the exception, with a decrease of 29% versus that in Q1 of 2021. And as you can see on the graph on our screen, Hollywood, like comparable local tourist destinations such as the 3rd Street Promenade and Venice Beach, enjoyed increased visitation week over week throughout Q2. Another positive sign throughout this whole pandemic is the increase in metro ridership. The HED is accessed through the Red Line by 2 stations. We have one on Hollywood and Vine and one at Hollywood and Highland. You will note that ridership increases month over month in Q2. As believers in the importance of transit to the regional center and as a regular Red Line commuter myself, both myself and Davon can personally attest to the increasing crowds in the metro stations. Now moving on to living in Hollywood. Hold on a second, everybody. Okay. Residential, despite a 0.2 increase in vacancy, demand for Hollywood living remains strong. Rental rates in Hollywood held steady, remaining higher than the city average. The average monthly market rent was $2,634 per unit within the Hollywood HED, and that's higher than the rest of the Hollywood submarket. Finally, Hollywood enjoyed a positive absorption of 366 units this quarter. Now moving on the construction side, there are a total of 686 housing units currently under construction in the Hollywood Entertainment District. Notably, 32% of these units are affordable and are meant to provide housing for low, very low, and extremely low income tenants. On your screen is a map that identifies the names and locations of multifamily housing investment within the area. As you can see, there are 58 projects either seeking entitlement, entitled, or currently under construction. The breakdown is varied, but we have over 2,400 units currently under the seeking entitlement process. Now I'll turn it over to Davon to discuss what is happening on the office and retail front.
All right. Thank you so much, Andrew. There's a lot of exciting things happening in the marketplace. So we'll talk about office activity as well as ground floor retail activity. Let's first kick it off with describing the office market conditions. At the end of Q2, the Hollywood office inventory consists of nearly 5 million square feet of office space. Despite the adverse pressure of the pandemic on occupancy rates, both overall asking rents and Class A asking rents remain strong at $4.73 in Q2. Despite a minimal 2% decrease quarter over quarter, Hollywood still commands some of the higher asking rents in the metro. Vacancy rate remains less than ideal at 22%. However, it should be noted that this reflects a 2% increase in occupancy. By comparison, the Los Angeles Central Business District had a vacancy rate of 22.8% at the end of Q2. On the office investment side, Ani has proposed an impressive project that will be situated at the northeast corner of Hollywood and Cahuenga. The existing historic Security Pacific Bank building, which is located within the project footprint, is not part of the new construction and will continue to exist as office space. The development program for the new construction consists of over 200,000 square feet of office space and 6,500 square feet of restaurant space. There are also 858 parking spaces included in the project. Additionally, nearly 10,000 square feet of open space and amenities will be provided. The entitlement process is well underway for this project, and the project is scheduled for completion in Q4 2026. Finally, I'd like to note that Netflix is finalizing tenant improvements within the newly constructed building on Vine by Kilroy Realty Corporation. Now let's turn to ground floor retail conditions. Businesses in LA County began Q2 operating within the orange tier and then swiftly shifted into the yellow tier of the state's blueprint for a safer economy. By the end of Q2, all COVID-19 related business restrictions had come to an end. As you can see from the image on the screen, Hollywood experienced increased visitation from consumers as more business offerings such as entertainment, and fitness became available with the elimination of COVID-19 occupancy mandates. Throughout the pandemic, the Hollywood Partnership has regularly conducted a survey of the operational status of businesses within the district. Overall, businesses are reopening their doors. Notably, 72% of food and beverage businesses were open at the end of Q2. Entertainment continues to lag as promoters and venues quickly rebook performances. Many patrons are thrilled with the upcoming opening of the famed musical Hamilton, which will be hosted by the Hollywood Pantages Theater in just 2 weeks. The acclaimed immersive Van Gogh exhibit will open its doors shortly to visitors and breathe new life into the former longstanding home of the Amoeba Records, located at 6400 Sunset Boulevard. 61% of the 703 available retail spaces are occupied by operating businesses. This change does reflect a minor decrease of 3.9% in occupancy from the prior reporting period. At the end of Q2, Hollywood welcomed 7 new retail businesses, which are identified on the screen. We invite you to patronize them. In fact, for a complete directory of ground floor retail businesses within the Hollywood Entertainment District, please visit hollywoodpartnership.com. Here, you can find dining, shopping, attractions, and personal services. That concludes today's presentation. For a complete rundown on all development activity within the area, visit the active development summary located on pages 36 through 39. I also want to encourage you to stay tuned for upcoming information about real estate tours and pending new marketing collateral material to support commercial retail leasing efforts. All right, well, it looks like we've covered a lot today. As promised, these presentations are designed to get you in and out and to provide you with a quick snapshot of what's happening in the marketplace. So on behalf of the Board of Directors and the staff at the Hollywood Partnership, we want to thank you for joining us today and have a fantastic week.